Hello everyone, it's me the Boss Hog, and if you thought I was above making dick jokes, you're very much mistaken. Join me this week, week ending the 8th of July, as we look at a pretty good week for tech and indeed semiconductors. Let's have a look at my buys, sells and dividends for the week. All right, so honestly, a pretty good week. I've been sort of up and down, sort of 2.5 to 3 grand for the last couple of weeks now. This week, I broadly tracked the market, especially the NASDAQ. Didn't quite keep up with it. I'm 50-50 US and UK, and the UK had a much less exciting start to July, although it's massively outperforming the S&P year to date. So comes and goes, I suppose. Not much to report other than the fact that it was very tech heavy across the weekend. As I've moved my portfolio more into tech, I was a beneficiary of that. No capital added this week. That was expected. If anyone watched my video last week, you'll know already that July is going to be a very expensive month for me. I have got a few weeks ahead, and I remain 3 weeks basically ahead of schedule at the moment. So even if I don't add another penny for July, I'll still be on schedule to hit what works out about 40% saving by maxing out 2 ISAs, one for myself and one for my wife. There's actually no sales this week. When this was first mentioned, I think 4 weeks ago in Discord, there was quite a surprise because I have been quite an active trader. It's now my 3rd time in 4 weeks where I haven't made any sales. I was a little bit tempted this week, I'm not going to lie. I did consider selling EPD and actually buying back into Phoenix, which is what I originally sold to by EPD. Didn't pull the trigger, although I kind of wish I had, but small. It wouldn't have been like exactly portfolio making. Broadly speaking, I remain happy with my holdings and therefore just trying to sit on my hands at the moment, even as some of my stocks have actually turned quite green. But I basically like what I'm holding at the moment. I'm in no rush to sell anything that I don't believe is materially overpriced. 3 additional dividends this week, all reinvested into the same company. It's been a bit of a theme for me recently. Historically, I haven't really done DRIP, dividend reinvesting plans, but at the moment, because I like the companies I'm getting dividends from, for me, it's a great chance for me to almost, in all cases, average down. It's almost like the companies themselves are helping me get a lower, average price, and that feels really good. And that's been a nice way to cushion what is still a relatively red portfolio at the moment, albeit with some green in at the moment. So really happy with these. You'll see in a second that I just put these back into where they are, as well as bought a couple more things. So let's have a look at those buys. All right, so first off on my list of buys is Hollywood Bowl. I have 1,500 shares that qualified for this. I now have about 1,700 shares, so I've been adding since. For me, I'm really happy to be buying these shares under £2, just putting it back into the business that I really like. I know consumer discretionary stocks are under a bit of pressure at the moment, but for me, I think Hollywood Bowl is the best in class. I also take the viewpoint that bowling is one of those good value for money family entertainment products. They're well located. I think that people still do want to spend, some money on entertainment. Still that desire there. Certainly the first half of Hollywood Bowl's numbers were really good. They have themselves set expectations that, summer might be a difficult period. Their H2 is normally quieter anyway because, fewer people want to be in a bowling alley during the summer. So that's fairly standard for a business that runs sort of September to August. So, their H2 is normally quieter. But still, I'm expecting a pretty good bounce back here after a couple of difficult years, obviously because of COVID and lockdown. I was also kind of surprised that their share price didn't rise a bit more this week. In fact, it actually fell, especially after one of their competitors, 10 Entertainment Group, put out what I thought were pretty good numbers, and the market responded quite positively to them as well. And in my opinion, Hollywood Bowl is a better business, more scale, more presence, more profitability, etc. So I was kind of surprised by that because, if you kind of buy into the premise of TEG, maybe there's some more value in TEG. I can't speak for that myself, but for me, I like bowling as a place to put the money, especially when the business is well run, and I don't believe the stock price is especially expensive. And indeed, my target price remains $2.90, so I'm not going to change that until I see H2. I think that's a reasonable multiple and a reasonable sort of earnings expectations, again, like I explained in an earlier video. Next up here, we have Huntington Bank shares. This is one of the companies I do keep a relatively close eye on. I will be going on to the earnings call on the 21st. I will actually bring back my opinions on that call to you guys and see whether my price is changed. I last looked into these in real detail about 9 months ago. I have been on quarterly earnings calls since, but I haven't rerun the numbers. At that time, I had 17.20. I sold out around 16.50, and at first I thought like I'd sold too early because it did go all the way up to like 17.60, but it's since come down a lot. But in fairness, of course, the world has changed quite a lot compared to 9 months ago. So it's very feasible that 17.20 is no longer a reasonable target. But let's see. I'll try and be as honest as I can with that. For me, I like HBAN. I think although it's a regional bank, I think it's a strong region in the Midwest. I also like HBAN specifically because I think it's growing well, it's acquiring well in my opinion, and it's basically got good balance between consumer and business. I also like it because it's kind of scoring very well on sort of what I consider lead indicators for performance, things like app downloads, engagement scores, customer satisfaction, you know, things like chatbot usage, stuff like that. Like it's a very forward-thinking bank. And I sort of like that focus. It's kind of, you know, it's traditional in some ways, but it's clearly looking forward. So I think it's a good bet. And although it's kind of mid-sized by American business standards, this is quite a large company. And again, it's right in the middle of the S&P 500. So I'm not overly concerned, but at the same time, I think it is one that I need to keep an eye on because, you know, this isn't something like JP Morgan where you can almost just buy and forget. Regionals have more risk, but potentially more reward as well. So we'll see on this one. But yeah, it's my regional bank of choice. And again, I'm very happy buying at these kind of levels. Where I've been averaging down, I'm only now down about 3% on my HBAN position, which again makes me feel really good if there is as much side as I hope there still is. So yeah, but I'll bring you that in a few weeks. And last but not least, we have Huntsman here. This is my best performing stock. In the past, I was buying at 24 and I sold out about 34. I think the business is now worth about 36. And I'm really happy with where I am on an average perspective here. I'm now in the low $31. And I use my dividend reinvestment here to buy 3/4 of a share under $29. So for me, I like Huntsman. I think it's a much improved business. It might not come out in screeners because its revenue's been for a bit of a journey over the last few years, but it's basically slimmed down, moved into higher margin stuff, and is, in my opinion, a much leaner, better run business than it has been maybe ever. You know, and for me, like what really propelled the jump, actually went from about $23 to 41, I think, was, you know, a hedge fund taking an 8% stake in it. They argued at the time it was materially undervalued, and I would argue that it now is starting to look again very undervalued. Like when I first started buying this, you know, in the low to mid 30s again. I did completely sell out, by the way, and then I'm back. When I started acquiring my stake again, I was sort of like, okay, you know, I'm getting this for like $34, $35. That's a reasonable price for a good business. Now I feel like I'm starting to get a bargain, despite the fact the market's very red at the moment. I think this is an industrial with a huge upside in the future just because of where its products are. So yeah, I'm quite excited about Huntsman, and again, very happy to be buying here. So all 5 of these buys are dividend reinvestment. Digital Realty and Huntsman, these are dividends I got very late on Friday, so I didn't have a chance to buy until Tuesday after Independence Day. So I hope any American subscribers and watchers had a nice holiday. But yeah, these are just the buys, so no capital added, nothing sold, so it's basically just dividend purchased. In terms of sales, again, I'll just skip over that section because there was nothing sold this week, and we can have a look at the portfolio performance in detail for the last week. All right, so normally I'll highlight a few of these green just where I've had a chance to read up on them and have some thoughts to share. But actually, I confess I've had a very busy week at work, and to be honest with you, the first week of the month because of my job is difficult to spend too much time on stocks. However, let's see what we can do because I have been reading, just not at the level I'd like to be at. So first of all, a couple of kind of stuff happening in the background regarding this. So all of the dividends now, so dividend payments and going ex-dividend, are automatically linked. So I'm starting to show them here sort of on the left of this table. I've also decided to show just the dividends that I've left to be paid, right? So in total, I'm going to get like, you know, a few more dividends in the month. Obviously, I've already received the 5 in the month to date. But I just didn't want to put them in here as well because it started to look a bit congested. So I decided to leave them out unless I haven't received them yet. So I've got 2 more to go this month in terms of MPW, which should be a pretty chunky one. You know, I mean, like mid to about £65, something like that. In the future, that would be more like £100, just where I was acquiring MPW shares while they were so cheap, in my opinion, and the sentiment about them was so bearish. I've spoken about that before, but yeah, I think I'm clear that I consider MPW a very clear buy at the moment. I'm very happy that I did buy. In terms of ex-dividend, again, I was thinking about showing these just for the next week, but actually, just to give anyone who might be interested in acquiring some shares before the ex-divvy, I'm going to just show these for the month. Again, once the date passes, I'll remove them, but for now, we've got 2 more as far as I know, which is Elixir. This is a pretty small, actually, UK, almost a penny share, just above £1 billion market cap last I looked. So this is sort of a management consultancy company. I just think it's got a lot of potential, already very profitable, and I like the way it's building its business, basically. So one of my more speculative plays, but I feel pretty good about it. And EPD as well. I mean, EPD is probably well known to many people. It's basically a very large gas primarily, but hydrocarbon pipeline business in America. Has some liquefied gas products as well. For me, I think it's one of the safest, best, most conservative, highest yielding companies that I can buy. For me as a Brit as well, the fact it's an MLP is actually an advantage. I know if you're American, you have additional paperwork potentially. For me, however, it means no tax on my dividend from EPD, so I get to keep the full near enough 8% of it. So I bought and sold EPD beforehand. It's, again, a pretty strong performer for me, made over £1,000 profit. Have a much smaller position this time, but again, I will be enjoying the dividends as and when it comes in. So I think there are way worse places to put your money than EPD at the moment. Yeah, and I guess there's probably just a couple of things here excuse me, that I want to touch on. First of all, you can see here that the list is dominated by tech stocks. I think you have to go all the way down to Fevertree before you find a non-tech stock in that top bit, so pretty interesting. And again, semiconductors here, part of the inspiration for this video, particularly strong. Again, I feel really pleased with the fact that I was buying Micron when I was. I'm now only about down 3%, something like that, and feel really good about my average. So yeah, that's great. Likewise as well, there's a few more in here, like AMKR is my largest semi play, and again, I still think that looks cheap at the moment. I have a very large position in that. But broadly speaking here, I'm sort of happy with the performance, right? The only weird one for me is, yeah, this Hollywood Bowl at the bottom was a surprise. And I will also just add that Redrow to me continues to be a surprise. Like, the UK housing sector at the moment is very underloved, even though housing companies keep coming out with like great numbers, even really positive guidance, right? Vistry this week, which is, I would say, a reasonable competitor to Redrow actually. They came out really bullish, right? Like, you know, year is outperforming, our margins are growing. Yes, there's some inflation. We expect inflation about 6% blended for the year, but our margins are increasing because we can pass that on. And to me, like, I actually see this as a great time to be acquiring house builders. And I mean, you can basically throw a dart in the dartboard that is the UK construction market, and I think you would probably be fine. They're just incredibly underloved, very cheap, yielding quite well, and you know, they're not basket case businesses, right? They're doing just fine. Maybe eventually inflation and you know, cost of disposable income and all the rest of that stuff will catch up, but I don't see it happening anytime soon. And to me, I look at the kind of macroeconomic position of house builders. The government isn't doing anything about supply, and demand is only increasing. And again, speaking of demand increasing, the UK is one of the few Western nations expected to see population increases over the next sort of couple of decades. And by the way, the latest census results also show sort of 10% growth in population in 10 years. So again, this is kind of like, we're not building enough homes. The demand's increasing, the supply isn't keeping up, and to me that just does one thing to the prices. So I see this as a great time to be buying. The Redrow results are actually in a couple of months, so I'll be keeping an eye on those as well, but I'm kind of hoping for more of the same and a pretty chunky dividend actually from them as well. So like I say, a pretty good week all in all. I don't have any more details to share at this time. Hopefully that's still interesting to my viewers. Any questions, reply. Again, I've been quite slow on replying. I think I've still got some comments I haven't replied to yet, so I'll do my best to get around to them over the next few days. Otherwise, thank you very much for watching, everyone. I've been the Boss Hog, and good luck for your investing. Bye for now.